Good afternoon, everybody. Welcome to webinar number 14. It seems incredible to know that we've got through so many of them now. We're going to be having a great session today. We've got over 200 people registered to the webinar today, so it should be a very busy session. Hopefully, there'll be lots of interaction from you, the attendees, to the panelists that we've got lined up for you today. I'll do a quick introduction to them in a second. If you guys, if you'd like to switch on your cameras. So we're delighted that we've got Tacenda live on the site at the moment, and Dave is joining us, and will be speaking to us in a second. We've also got Ollie Walsh from Pippit Global, who will be presenting first, and as I say, I'll do the proper intros in a minute. We've got a really good pipeline coming through as well. So not only have we got Tacenda live at the moment, Ollie coming soon, and but we've got a whole host of others that are waiting in the wings to go live. So we've been working hard over the last number of weeks and months since we finished the Acure campaign in February, and we'll be bringing you more and more very exciting opportunities as the days and weeks go on from here. A lot of it is because of EWIS, as you probably know. An awful lot of you do avail of that, but yeah, there are other companies who will be coming in using a different mechanism as well at the stages coming soon, whether that be a SAFE or a CLN, and we'll talk about that at some more length further on down the line. But really today is all about these two. So I will, Dave, I'll introduce you properly ahead of your campaign, ahead of your presentation in a short while. So maybe you can just say you can switch your camera off, and we'll get started with Ollie from Pippit. So Ollie is based over in Galway. Pippit is well, I'll let Ollie do the full intro to the business. So Ollie, if you'd like to get your screen ready and get shared, and I'll leave you to do the full introduction yourself. So this is Ollie Walsh, CEO of Pippit Global, and Ollie, over to you.
Thanks, Chris. Hello, everyone. Thanks for joining in and for hearing the Pippit story. Okay, immediately my screen won't move.
You okay?
Yeah, my screen is stuck, so I might have to do it in this format, I'm afraid. I hope this is okay for you.
Yeah.
Yeah. So Pippit Global, what are we? We're a for-profit social impact B2B fintech platform. So what does all that mean? So Pippit's merchants are banks, e-wallets, e-commerce platforms, and billers in emerging markets. The consumer is a cash user who is generally a migrant who is unbanked where they live. So there's 272 migrants globally in 2020, with 54 million of those in Europe. So the Pippit model really disrupts Western Union. So instead of remitting cash, the migrant can lodge cash directly into an account through our cash collection network. So we have 500,000 cash-in points in 30 countries. You may have seen the deck in advance of this, which has 320,000 cash-in points, but we've added 180,000 in the last week. Things are moving fast around here. So the receive end of our network is now collected to 50 million bank accounts in Africa, 100 million bank accounts in Latin America, 210 million e-wallets in Africa, and 2,500 billers across 58 countries. So the first corridor we went live with was from the UK to Ghana. We went live there in 2019. And in 2020, we processed 1.5% of the total remittance market from that corridor, which was £6.5 million, generating 70,000 euros in revenue. We're now scaling up the model and adding additional corridors in both the send and receive. So the problem we're solving is the cost of sending money home is too high for migrants. So remittances support families across Africa, Asia, Latin America by providing financial stability for families at home. In 2019, $75 billion in cash was remitted globally. The cost of that remains excessively high. From the UK or EU to Africa, it's 9.5% is the average cost of sending home cash. And within Africa, it's actually higher, can be up to 20%. So what we're doing is breaking down the cost of those remittances. and putting more cash in the pockets of families that need them. In our digital age, you will be under the impression that cash is on the way out, whereas in fact it's actually growing. It's across the US, UK, EU, the Middle East, Asia. The use of cash over the last 10 years has grown. Currently, there's $7.6 trillion in cash in circulation, and it is growing across 40 of the major 42 economies. It's the global cash economy in terms of employees. According to the World Bank, there's 230 million private sector employees in 2019 paid with cash. And of course, without a bank account, cash can only be used locally. So what we've created is an international cash platform that essentially digitizes cash. So the solution, who's it for? How do we use it? So it's for international cash payments. It's for cross-border bill payments. About 30% of the money remitted globally is to pay bills at home. So with our service, the migrants can pay their bills in cash directly from where they live. E-commerce across borders. So you can pay in cash in the UK for an order from a website in Nigeria. We can top up e-wallets with cash. We can do domestic e-commerce as well. We can load cash to mobile money and international cash bank lodgements. And as I said, we have 500,000 cash in points, 2,500 billers, 150 million bank accounts, and 210 million mobile money accounts across Africa. Examples of tech companies who are realizing that cash is still important is in the last few years, Amazon have launched Amazon Cash. So across the US, Canada, and some of Europe, you can now load cash into an Amazon account to spend on Amazon exclusively. In some parts of Latin America and Asia, PayPal have launched a cash service where you can lodge cash to your PayPal account. And Zoom is an international bill pay service owned by PayPal, where you can now pay your bills internationally in cash. So the model is validated. So how does it work? So as we said at the start, we're B2B. So the consumer logs on to an account they have at home with a bank or an e-wallet or an e-commerce company. An important part of being B2B is that our merchant owns that consumer relationship. So it's a trusted source that the consumer is dealing with, as opposed to an unknown startup. Obviously, trust is key in payments. So the consumer is hearing about the Pippit service from their own bank or from their own e-wallet. So they log on to their account. They select that they want to put 100 euros into their account. Within that account, within the bank or the e-wallet ecosystem, they get one of our barcodes. So there's no redirect to Pippit, and the consumer doesn't even have a Pippit account. They bring that barcode to one of our cash in points, like I said, 500,000, scan the barcode and pay the cash over the account. So in a bank's scenario, once the consumer has scanned the barcode, our API notifies the bank that the account has been updated, and the bank updates the account that day in the local currency. So our fees, we have a relatively small integration fees. We have between a 0.5 and a 3.5% transaction fee, and where applicable, we have a small FX fee as well. So as I said, the consumer is a migrant. So in terms of the lifetime value, the average migrant in Europe sends home 300 euros 11 times a year, which is 3,300 euros. With an average Pippit transaction fee of 2%, that's 66 euros a year, or 198 euros over 3 years in revenue for Pippit. We've picked 3 years as an average because some migrants will get an account quicker. It's very difficult to get a bank account, for example, when you move country, which is why people use Western Union, because they can't get a bank account where they live. So some will get them quicker, some will take longer. In some regions in the Middle East, for example, migrants can't have bank accounts at all, so they're always paid in cash. So the population of 54 million migrants in Europe alone, there's a significant market. Our global footprint, as I said near the start, we opened up the UK to Ghana corridor first. We now have collections in 30 countries, which are either live or onboarding or signed and on a roadmap for integration. We are now live in France and Spain. We're live testing in Chile. We're live testing in Kenya and Uganda. The blue regions there are where we have billers, and then receive countries as well in terms of bank accounts and e-wallets. So we've a global footprint and a very active pipeline as well to additional partners onboarding. Sorry, missed one there. So some examples of who we work with: major regional and global fintech payments platforms. So PayPoint, you're probably aware of, it's our UK cash collection partner. Cellulant is the biggest payments institution in East Africa, so that covers a lot of East and Central Africa for us in terms of collections and in terms of settlements as well. We have a big collection footprint in Africa. There is probably a perception that when an African migrates that they move to Europe or move to the States, whereas actually 70% of African migrants stay within Africa. Nigeria, Ghana, Kenya, Uganda, South Africa are the big hubs that people migrate to, and as it's even more expensive to remit money within Africa. So we're looking at a big African footprint. ZPay is our Ghana partner, so they cover a lot of the West Africa for us. Worry are a collection partner for both West Africa and for some of Europe. Payke are one of our big global billing partners. Flutterwave are Africa's biggest payments institution. We have an agreement with them, which we're rolling out to include their payment services for websites. So they have 40,000 African websites use their payment services, and we'll be adding on to that. We're onboarding at the moment as a payment option. Again, for African migrants living in Europe to be able to shop on African websites, have products delivered straight to their families in Nairobi or Accra, but pay in cash in the UK or France. Finestra is one of the big global banking platforms. We're currently onboarding with them. This is a very important one for us, coming back to trust. They've 8,500 banks use the Finestra platform, and we are integrating with their API. So a bank would be able to integrate us through Finestra, so through their existing banking platform, as opposed to a third party. The Finestra sales team add Pippit to their offering, so Finestra will be actively selling Pippit as a service to banks in emerging markets, starting literally next week. We should be on the coming soon section on their site next week. And Checkout is an agreement we signed last week. They're a big global payments company. The model we're working on with them is for settlement to Visa debit cards. So we are onboarding with them at the moment. Once that's complete, we'll be able to send payments, send cash to every Visa debit card in the world. And the settlement time is 15 seconds. So a migrant can go into one of our cash-in points anywhere in the world, send cash to any Visa debit card in the world, and it will be there in the local currency in 15 seconds. So in terms of the competitive landscape, so obviously the big players in cash remittances are Western Union and MoneyGram. We see the market in terms of competition as accessibility and cost as being the key factors. So accessibility for Western Union is 100%. Anybody can walk into a Western Union outlet and send cash home, but like I said, it's 9.5% to do that. Africa, very expensive. We've got Wise there as a represent the modern fintech apps, Remitly, TransferMate, Transfer2, etc. And the banking services. They're low cost, but they're low accessibility, because all of these apps require the sender to have a bank account to get funds into the system. So it's low cost and fast, but with low accessibility. With Pippit, we're both accessible and low cost, so that's why we're in that position. Just in terms of how we're different, our model is different from the likes of Western Union. Our designation under the Payment Service Director is a technical service provider. So we're a tech company. We're not a payments institution, meaning that our merchant partners, the banks, the e-wallets, they're the ones responsible for the KYC, know your customer, anti-money laundering, all those regulations, and onboarding the customer. So we don't have that overhead. The bank owns that responsibility, which means that we can offer our services much cheaper. We have Rapid in there as well, who are a startup US-based, who are also offering international cash services. They would be one of the only other international cash platforms there is. And they recently closed 300 million investment at a 2.2 billion valuation. In terms of our management team, there's 6 of us on board, the 3 founders and their growth team. We're a mature team. We've all 25 years experience in our industries, and we've all been with Pip for at least 3 years. Very experienced in growing businesses. So the financial details, our target revenue for this year is 350,000 euros, rising to 2 million next year and 7 million in 2023. As I mentioned earlier, I think our revenue last year was 70,000. We're looking to raise 350,000 euros in advance of going for a Series A in Q4 this year. The revenue or the funding really being to build out the team. As I've mentioned, we've quite a roadmap of integrations to be done. So we're looking to scale out the team to increase that integration speed. So to break down those revenues into what it means in terms of transactions and users. So with the average migrant sending home 300 euros 11 times a year, with our fee being an average of 2%, it's 6 euros per transaction. So to get to 350,000, we need 58,300 transactions, with 11 times a year being 5,300 users, raising to 1.16 million transactions in 2023 with 106,000 users. So these are obviously very achievable figures considering the footprint that we have. We're looking at really getting 0.3% of the transactions and only 0.02% of the world's migrants for us to reach our targets. So like I said, very, very achievable targets. And why invest? Like I said, we've identified a global industry that is completely underserved. We have a highly scalable platform, a low-cost model. We've significant growth potential through our network of cash in points, billers, banks, e-wallets, etc. We're also planning to register with the likes of Funderbeam, which is a secondary market for private companies. So essentially to make the shares liquid for investors. And fintech, as you probably know, is a very active segment for mergers and acquisitions globally. So our plan is to exit by a trade sale in 2023. And as I mentioned from the start, we are a social impact company. So your investment helps to impact the lives of millions of people around the world and do some good. So I think that has me on time, Chris.
Absolutely, perfect timing. Thank you very much, Ollie. Very interesting indeed, and not only the social side of it as well. I mean, making those money transactions affordable for those remittances into country. It's very worthwhile, but also kind of hopefully a financially sustainable and profitable business as well, which you've highlighted there in your financials. Fergal, would you like to switch on your camera?
Yes.
Thank you very much indeed. So Fergal's been having a look at some of the questions that have come in. And again, everybody, if you can put your questions, if you have any, into the Q&A, and we'll try and get through those in the 10 minutes that we have, that we've got left here. Any ones that we don't get a chance to cover, we will give them to Ollie, and Ollie can type them up rather, and put them up onto the campaign when we go live, and that will be coming soon. So we'll be writing out to you when that actually happens. So anyway, away we go. Fergal, have you got the first one there? If you can, please.
First question in is obviously this is something that Enterprise Ireland would strongly support. What levels of support have you received from EI, from Enterprise Ireland thus far, Ollie, and what plans do they have for you going forward, I suppose?
So our last round, which we closed 2.5 years ago, which was led by Westloop Ventures, a US fintech VC, and was followed by Enterprise Ireland. So we got the full commitment from Enterprise Ireland of 250,000 euros. And we got additional support from them last year of 75,000 euros. So Enterprise Ireland are well behind us, and their global network has been fantastic in supporting us in terms of business development and introductions. We're very active with our team in West Africa and East Africa especially.
Excellent, very good. And Peter asked a question there just to add on to that. Will Pippit qualify for EWIS relief? And I think that is the case Ollie, is it?
That is pending the investment structure.
Excellent. Very good.
One of the elements that Adrian asked, I mean, who are Pippit global direct competitors? You mentioned obviously the Western Union and a couple of others there, Ollie, but somebody else also talked about kind of Revolut and how do you differentiate yourself between the others, the other players in the market?
So we'd really consider the likes of Revolut to be a potential channel partner. I mean, they're an online bank, the same as our African banks. Revolut, I think you can actually put cash into your Revolut account through PayPoint. So I wouldn't consider them competitors. They are really channel partners for us, or potential channel partners. So I mean, we're the facility to load cash into an account. So like I said, TransferMate, Transfer2, Remitly, all these international cash, all these they call themselves cash transfer, but you actually have to have a bank account to get money into those accounts. So they're potential collaborators as competitors. The real competition is the Western Union as well. They're going to send cash, and obviously we're giving them significantly more cost effective than them.
Very good.
Excellent. A question here from Neil. How do you plan on driving the revenue from 350k to 2 million in the 12 months? What needs to be done? What are the figures that you need to achieve to get to that 1 million, or sorry, the 2 million mark? Yeah.
Yeah, well, it's really around driving the integrations and exponentially growing those. So to use an example of ZPay that I had in the slide there, they were a partner for Ghana. So from UK to Ghana, we did £6 million, £6.5 million of transactions with them. They're now adding on France and Spain and Portugal and Germany as we add on more sending countries, so we can exponentially grow with existing partners. So we're growing both ends of the network. But the big part of that really is getting involved with onboarding with the big global players like Finestra and like Checkout that can drive big customers through our platform.
Very good. Question here from Owen. How can you be a social impact company and for profit? Do you not need to be one or the other?
That's an important part of our model. You know, we drive very much as a social impact company. We keep our prices as low as possible deliberately for that social impact. Now, by having our prices as low as possible, pure economics tells you that we'll drive volume because migrants sending money home will go where they can send it the cheapest. The unbanked migrant currently has to use a Western Union. They have no choice. On the average transaction, it's £12 cheaper to send money with Pippit than it is with Western Union. And that makes a huge difference on the ground in places like West Africa. So it's win-win that we can make a social impact and offer good value and then drive the economics of the business. And in terms of marketing as well, you know, when we talk to banks in Europe and you say social impact, they send you to the marketing department. When you talk to a bank in West Africa, you say social impact, they have a social impact department. You know, they're aware of the value of remittances on the ground in their countries. So it very quickly gets you up the chain when you're in the sales process saying that you're there to make a social impact.
Very good.
Excellent. I have a good question here actually from Martin just regarding just some unique economics around the partners. How much do they receive? So in terms of a transactional fee, you get 3.5% or thereabouts. What percentage of that actually goes to Pippit, and what needs to be paid out to third-party partners?
It varies depending on the collection partner. So our fees that we pay out range from 1% to 2.5%. So that's why I use an average of 2% in the example.
2% net to Pippit. Yes. Okay, excellent.
So that's averages out.
What are the major challenges? Sorry, this question from Justin. What are the major challenges, if any, in cash collection points or international segments to Pippit? So, yeah, what are the challenges there?
The challenges around cash collection. Well, we integrate with kind of existing cash collection points, the likes of PayPoint. So it's where people go to pay cash to top up a mobile phone, or you can, you know, in PayPoint in the UK, you can go and pay your electricity bill and cash and stuff like that. So we use existing channels. So there isn't that much of a challenge for us because we're directing people towards where they can already make cash payments and to known brands like PayPoint as well. So they're not looking for Pippit when they go into a shop. They're being directed to PayPoint.
Very good. Very good.
Just on the use of the funding, a few questions around that, Ollie. You mentioned there expanding the team. What specific departments are you looking at kind of expanding? What roles are are coming up in Pippit?
The focus will be really on the technical team. We've a pretty small technical team. We have a small outsource requirement as well, which the outsource don't do our core technology. They do some integration stuff and dashboards and stuff like that. But we've a growing roadmap of integration, so it's key to get the technical staff built out to be able to accelerate those integrations and therefore grow the revenue of the transactions.
Very good. Very good. Question from Peter: when do you hope to kind of roll out into Nigeria?
We have a bank signed in Nigeria, Sterling Bank, which is one of the big 5 banks in Nigeria. So we're integrated with their app, Switch NG. We've an agreement signed with Flutterwave, which is they're Nigerian based, but they're Pan-African. So we're already in Nigeria. We have sent some transactions to Nigeria.
Very good. And kind of almost, how do you reach your customers? How do they become aware of Pippit as a player in the industry?
Well, that's also a key marketing question, because we, as a B2B provider, we integrate with, say, Switch NG, that bank app, and the bank tell their customers about us. So we don't have the overhead of creating a consumer brand, and we don't have the time that it takes to create the trust in a payments brand. The word that you can now lodge cash into your bank account comes from your bank, not from us.
Okay, very good, very good. And that's a key element to the business model, obviously.
Absolutely, absolutely. And we work with our merchants marketing departments to kind of coordinate the marketing message with them. But a lot of it is done obviously through push notifications, and it's a very low cost marketing campaign because it's an existing customer base that they're targeted within our merchant partners.
Very good.
Fantastic. Just a question around the investors and the support, that the angel investing that you have to date. How much is it? Kind of what stage they invest? Can you just kind of as much as you can give a bit of information about some of your?
Sure. The company's just over 5 years old when we started off, and we're really a concept phase. We got 3 Irish angels put in 125,000 euros between them. Our last round, like I said, it was 2.5 years ago with West Loop Ventures and Enterprise Ireland. We between Irish, UK, and US angels, we brought in about 150,000 euros through angels. There's a couple of super angels in there, and a few mid-range ones.
Very good. We'll take this as the last question here, Ollie, as we need to kind of move on as well. But and again, if we've got loads of questions that we haven't managed to answer here, so we will answer those manually and put them up onto the site when we're live. But the funding is to be used to expand the team. What specific departments or roles will you be adding to?
That's the technical question.
Yeah, we asked that.
I think, did you already ask that question?
Yeah, I think there was a question very similar to that. Sorry.
We
have about 50 questions coming in here, so we're just trying to.
No worries. It's the tech team is the answer to that, really.
Yeah. Excellent. Very good.
Okay. Well, listen, thanks very much, Ollie, indeed. And as I say, yeah, we'll be getting those questions out to you so you can kind of answer them in a bit more detail, perhaps, as well. But thank you very much indeed, and well done again. And we'll, as I say, guys, we'll be getting Ollie and Pippit onto the platform soon. So watch this space. So thank you very much indeed, Ollie. Well done.
Thanks, guys. Dave, looking forward to your presentation.
Absolutely. Okay, so
here's Ollie.
Dave, can you switch your camera on if you can, please? That's great. Thank you very much indeed. So Dave, welcome. And this is Dave from Tacenda. Tacenda, as you may know, guys, is live on the site at the moment and has already had some great traction. We're up to 50% already on the campaign and of the target that we're seeking of 600,000. So which is a great accolade after only 3-4 days we're at now. So well done on that. But you have your presentation there, hopefully, Dave. So if you could share your screen, we'll get started and you can introduce yourself. So can you go into presentation, and does it move from one to the next slide to the next slide?
It's doing that. Can you see my slides?
Yes, we can. Perfect. Okay, I'll switch off and I'll let you go then, Dave. So away you go. Thanks very much.
Thanks, Chris. Okay, thanks everyone for giving me your time today. I've got about 12 slides here, talk through the Tacenda platform, why we've designed it, who's involved, the size of the TAM, and so on. So Tacenda is a revenue optimization platform. The revenue operations market is reasonably new, and it is the sort of accumulation of many years of sales operations trying to best pull together all of the strands of a company's activities that generate revenue and get the most out of it as possible. The Tacenda platform is unique in the fact that it is the only platform on the market at the moment that provides a real-time view of every activity on the business, in the business that impacts revenue generation across all of the different departments. So everything from marketing right through to sales development, account management right through to retention, all of it's monitored at the same time. And we've called it an intervention-based platform because we couldn't find anything similar to it out there. We are not interested in visualizations. We're not really interested in doing fancy graphs. We are interested in looking at the revenue generation platform as if it was a manufacturing belt. We want to identify problems immediately as they happen and recommend intervention on the fly. So the problem exists in sort of under four sort of ideas that I'll go through now. So but before I get into them, I'll sort of go back to this manufacturing idea because I think it's the best way to conceptualize what the platform does. If you think about revenue generation in a business, starting off with leads coming through from different sources, different campaigns, they hit the sales development reps, they work on those leads, then they hit, they're generated by marketing, they hit the sales development reps. They then move through to selling. They then move to account management where they can generate revenue. They can be upsold or downsold. They can be retained or lost. Most platforms out there at the moment look at these activities one department at a time. So they look vertically at each department, and marketing can be saying it's doing a good job and sales can be saying they're doing a good job. But when you start trying to tie it all together to see what's actually happening, it rarely adds up. So Tacenda is the only platform out there that looks through the business instead of vertically down into each department. We also are moving away from the QBR or monthly business or quarterly business review idea. We want to give the management all of this information in real time. So the current way of looking at the business is based around letting the business run for about a quarter or a month at a time, and then doing a review and trying to guess what went wrong. We are moving that substantially into the real-time environment so that you can see things that are going wrong. You're getting prompted by the platform, and you're being told what you need to do about it. And then sort of one of the last lenses is problem identification. In this review approach that I was mentioning, businesses there's an awful lot of guesswork going on. So you wait till the end of the quarter, you go through the reports, you have a team meeting, and people speculate essentially as to what they think went wrong and what they might do about it moving into the next quarter. That just simply doesn't work anymore. So the Tacenda platform looks at what's overperforming and underperforming. It looks at the sources of the leads and so on that are being fed into different departments. It looks at the performance of the people, and it starts to measure them all together and identifies what is the most likely cause of the deviation in performance and recommends solutions. So the target market and opportunity. We originally designed Tacenda to go after high growth companies, but we're getting an awful lot of interest from basically anybody with a traditional sales operations environment, everything from recruitment right through to telecoms. The size of the market that we're aiming at it's eye-wateringly big. It's well over 100 billion, and it is growing at 80% per annum. That was the current that was the last measure last year. I think it's beginning to grow quicker. So at the moment, in order to try and keep the market that we're going after sort of manageable, we're going to focus on B2B telecoms, SaaS software, and business services like recruitment that are in English-speaking countries, preferably the UK or the US. That's keeping us at something that we think we can get traction in, that's worth about 3 billion. So the way the solution works is that we simply get sign-ins for the CRM, for the HR platforms, for the marketing platforms, and so on. And Tacenda plugs into them remotely. We work with a single administrator, and then the platform pulls everything into our own databases and tracks about 130 key revenue or key KPIs at the moment across 60 combinations across whatever departments are relevant. We have about 3 million combinations at any one point that we're monitoring. We use deep learning and advanced AI modeling techniques to identify leading indicators, so things right up the top of the funnel to start to spot deviations, and we recalculate the waterfall to estimate impact on attainment, and we continuously update all of the individual contributors, managers, and C-level as to the recommended actions that they should be taking. The revenue and business model is a typical SaaS recurring revenue model. So we have a license fee based on users and charged on a monthly basis. So it's 90 euros per user per month. We're looking for the companies that are beta testing with us at the moment. Our average sales size is about 75 grand per annum. We are currently in a revenue model. If you think about what we're building, the platform is massive and sprawling, and it also prompts management and individual contributors with what's working and not working within their business. So we are focusing very much over the next 6 months on getting the platform absolutely right. We don't want any misfires, and we don't want to be telling people there's something wrong with their business when there isn't, and causing, trigger fingers in the management team. At the moment, we're beta testing in $2 billion companies, Go Cardless and Handshake, and we are now negotiating terms with actually 4 additional. We're going to keep our betas limited to 6 because we want to go wide rather than deep at the moment. We're expecting to get our first revenues in September, and we're already setting up demos for the first license sales. So our marketing and sales strategy is it's pretty standard for a SaaS B2B platform. It is simple marketing straight out, followed by an SDR team. So we're gonna practice building out that engine, and then we're going to start hiring in SDRs to support our direct marketing activities just after July. Our team at the moment, we're very experienced and well known within the markets, and particularly in hypergrowth companies. There's myself, I'm the CEO and co-founder. I've designed and operated and optimized the growth engines of some of the fastest growing software companies on the planet, VMware, Dataminder, Symantec, Go Cardless. I met Robel, my co-founder, on that journey. We actually ran the prototype of the platform in Go Cardless and Trustpilot and got uplifts in revenue of over 15% in each immediately. And then there's our CTO, Powell. I think he's done 5 startups or more now with multi-million dollar exits, multi-million euro exits. Yeah, as we said, the company's in pre-revenue model. First license subscriptions, revenues expected in September. Year 2, run rate, we're thinking 3 million plus, and by year 5, we're expecting 6 million plus. The way that we've built our forecasts is around market average performance for scale-ups, and then we've reduced 25%. So 3 million, 6 million plus, I imagine will be easily achievable. We're just making sure that we give ourselves room from a budget and performance point of view. As regards competition, so as I said, this is the revenue operations itself is a sort of massively growing and new market. Sales operations has been around for a while. The two main competitors that are out there are Clary and Insight Squared. They're both exceptional platforms, but limited in the way that they approach the problem. Clary is more of a pipeline or sales management tool. I think they've just been invested. I think they've just got $100 million investment put into them. They're doing very well. They focus on essentially the sales pipeline part of the problem. They don't look at the problem end to end, and so therefore they don't add the same value that we do. Insight Squared does look at the process end to end, but they are more of a solution-based or service-based solution. They will build out something unique for large companies. It's a very interesting and effective way to address the market. We're going down the platform route where we have something slightly more scalable and repeatable that we can push out to the mid-market. Tacenda, I can say this without fear of correction, Tacenda is unique in the way that we're approaching this problem. And we have a platform that has proven to work, demonstrably proven to work. We're looking for about 200K from Spark crowdfunding. We are going to pump most of that into product. As I said, the next 4 to 6 months for us, we want to make sure that we've got something absolutely best in class. Myself and the other co-founders have put in 90K. I think that's up to 130K now to develop the Tacenda product. The reason why that we're taking this approach is because we want to best position the company for investment from VCs. We want to go to the VCs when we have live deployments and happy customers. That puts us in the strongest possible position to negotiate a Series A. And we're going with the $2 million valuation that we got from done independently by Equidam. As I said, on the 5. So we're looking at an exit strategy around year 5 with probably 6 million plus ARR. That would give us a 60 million plus exit. That could be easily between 60 and 100. We're hoping. I think that's a safe estimate. I would really want to come out of the traps faster and hit something much larger than that. But that's a reasonable claim to make. So why invest in us? We do genuinely have a world-class management team with over 35 years experience in growing hyper-growth companies. We do significantly improve the effectiveness of revenue operations. We've provided demonstrable value already in our deployments. The market that we're dealing with is eye-wateringly big, 100 billion plus with 80% growth. And we've already got backing from some of the biggest names in the industry. So Martin Moran, one of the founders of Salesforce Europe, Wim Durkinen, who co-founded Expenditure, Krishna Reddy, who's the CEO and co-founder of Black Box Hosting, which is now in the Deloitte fastest growing 200, a Belgian fund called Pitch Drive, and we are now just finishing off a negotiation with Gary Roberts from Pitney Bowes as well, who's coming onto our board. You can avail of the 40% tax rebate that's available under the IIS scheme also. And that's me for the moment.
Very good, Dave. Thank you very much indeed. I better remember to switch my microphone on before I come on. But thanks very much. Excellent presentation and lots of questions coming into the Q&A. So as I say, please, everybody, use the Q&A function if you can, please, rather than the chat. It's a bit more easier for us to kind of negotiate. Dave, if you'd like to stop sharing your screen, then we can see everybody in their entirety. And Fergal, do you have the first question?
Yeah, lots of questions here about and excitement, I suppose, interest regarding the beta testers, Dave. Just if you could maybe elaborate a little bit more on them, when do they start, what the period of time is, and maybe some feedback, or have they had any constructive criticism, or what's the the feedback been like so far?
So we have started. The way we've approached the build of the product is we've started from the back end first. So we've built out all of the KPI calculations, and now we're pulling information from their CRM and various systems, and we're beginning to prompt them with the view that we think is relevant for their business and the impact that their different activities are having. The feedback is very positive. We're taking a send and check approach, so we're not just pumping out these alerts to everybody. We've picked one or two people to work with us, and we're getting the feedback. We're starting to work with the CRO of Handshake at the moment around the GUI. So he wants to see the world in a particular way, and we want to build our GUI in a way that it is repeatable. We want our implementations to be less than 5 hours. We don't want a service-based business. We want a platform that people can plug into. So that we're working with him and feedback from the sales ops leader within GoCardless to present them with the information in a way that they find the easiest to consume.
Very good. And just to elaborate on that, has there been any interest from government, or is that kind of a space that you're looking into as well?
As for customers or support?
As customers, so within government departments and financial centers within. So
this is an interesting one. I had a fairly closed view of. So the answer to that is no. We have not approached government in any way, but it's an interesting question that people start thinking about the application of this in different areas. I hadn't really thought about it as regards very large companies, but we're now beginning to get on the radars of large telephone companies who are B2C based. So there may be departments in the government that we simply haven't thought of.
Very good. Andrew asks, how does this differ from a CRM that is integrated with something like Tableau?
That's a very good question. Tableau is a visualization tool. That's why I was sort of focusing on this manufacturing idea at the start of the presentation. If you look at statistical process control programs that monitor conveyor belts that are moving, hundreds of Coca-Cola bottles through them at a time, it's all about rapid intervention. It's all about spotting deviation and getting on top of it immediately and understanding the cause of the problem. Tableau, it simply isn't designed to do that. Tableau is designed to give you information in a way that's easy for you to consume. It doesn't really, it's not a real-time or intervention-based sort of tool set. CRMs, you can, like any reasonable CRM will give you reports and so on, but again, they're clunky. They're not particularly well designed to focus purely on revenue, and they again do not give you this real-time intervention approach.
Very good.
Excellent. Just a quick question here on the utilization of the funds. It was included there, hiring of a CTO. Have you a CTO already in situ, or are they going to be moved?
We have a CTO in situ. We want someone more specialized. I particularly am looking for someone who has some experience in revenue operations and/or systems and process control. The reason for that is that the areas of expertise are reasonably unique and they sort of overlap like a Venn diagram. Sales operations is a little science by itself, revenue operations, and then coding obviously is an expertise. If we can get someone that has experience in both those areas, it will massively accelerate how we can address the business.
Very good. You mentioned a number of investors there, Martin Moran, for example. How much have they put into the business so far then, please, Dave?
About coming up on 300 grand.
Very good.
That's what's pledged. I haven't put it through the system yet.
Very good. Okay. Another one here. Who's likely to be interested to purchase you in 5 years' time? Any conversations so far reflecting what you may need to do in to interest them more?
Yeah, well, we do have Martin on board for a reason. We have plans. I don't know how much I can commit to that, but we have a propensity to believe that that we would be of interest to Salesforce.
Very good. Very good.
Excellent. Actually, an interesting question here. In layman terms, would this platform be an employee performance tool and essentially lead to kind of cost savings and maybe job losses within certain companies?
V1, no. V2, yes. So V1 is about giving a standardized view across all departments. It's removing the, shall we say, potential exaggerations that each department claim about their performance and showing up the real problems in the business. It also gives a standardized view from the C level down to the aggregate level, so that's manager, and down the individual level. When rolling this out as a prototype, rather than using it for performance management, I found myself being managed by the individual contributors, because I was giving them a full view as to where they were going wrong and where we were going wrong and how we were feeding them. So the reviews turned into a demand session where they would say, well, you're underfeeding me on this front, and from this lead source. And by the way, I need help on my conversion rates, at this point in the sale. So it became a much more positive conversation rather than a traditional performance management where you get blindsided as an employee and you don't, you can't see your own business. So it's been quite.
And what integrations do you currently support, and what are in the pipeline, Dave?
So we're working through Zapier. So basically anybody they can talk to, we can.
Okay. So pretty much everyone really, they're kind of universal across the board.
Yeah.
Your HubSpot, your Salesforce, your.
Yes, we're being smart. We're focusing on Salesforce and the main players at the start. That's 80% of our target market. We'll stay focused there until someone gives us a good reason to go out and start doing more difficult integrations.
I know this is a new field, but Michael asked, do you have any examples of buyouts in this space at the 10 to 16 multiple of revenues that you expect after year 5?
In this space, I'm not really sure. That's something I've never looked at. I just went through the traditional SaaS valuation model. We are a pure SaaS platform. We would be evaluated and behave like any other sale in that area. I can go and do some research and try and find particular examples if they're needed.
Very good.
And very good question here from David, actually. What do you see as the biggest risk categories to be able to execute and deliver your plan? So to get to where you're going, obviously sales take a longer period of time. It's a larger ticket. You're saying average around 75,000 per year. So I imagine you're not going to get a contract overnight. So kind of between that and what other kind of risk categories do you see as being a kind of a pain points down the line, Dave?
The pain points that we're trying to manage for are making sure that we have a platform that feeds out alerts incredibly accurately. Each business has a certain amount of localization on it in the way that they may charge or ramp up charging within their customer base. So we want to make sure that we have a platform that does not cause management misfires. That's something that we need to be all over. So that's why we want to put most of the money into the product. The second one then, as you've just said, is the acquisition pipeline, or new revenue acquisition pipeline. I want to tackle that through sort of 3 approaches simultaneously. One, we're looking to become an ecosystem partner for SFDC. We're going to have our direct sales engine to the mid-market, but we also want to have a self-sign-up with rapid integration capabilities for the SME sector. We believe that the combination of those 3 approaches will have enough churning in the background to give us a steady growth.
Very good. And Neil asked 2 questions, which we'll probably keep it the last ones here, Dave, because as I say, we've got loads more in addition, but we'll answer those manually offline. But where is your data held? You mentioned the US, and also what level of technical skill does the customer need to integrate and operate the system?
So the data is held on AWS, S3 and AWS. And complies to all safe harbor rules. We have also just got into, a leading fintech that's European based, so we meet all GDPR criteria, etc. Sorry, what was the second part of that?
The second one is what level of technical skill does the customer need to integrate and operate the system?
So we're trying to keep that to an absolute minimum. They do need to have a reasonable understanding of their sales operations environment, but we are trying to make this as plug and play as possible with a single administrator who would be the sales operations individual within the company. If they don't have that functionality, then or that position in their company, I'm afraid that we wouldn't probably be suitable for them.
Very good, excellent. Okay, well, listen,
Good.
thank you very much for all of those very robust responses to those questions. And as I say, guys, if there's any all the other questions that we haven't answered, we will do so manually offline and publish those on the site in the next
I think,
day or
Chris, we even hit our limit of questions there on the on the Zoom. I think we broke Zoom.
So, Fergal, thank you very much for your time. And
Yeah.
Dave, of course, thank you very much for yours. And of course,
Thanks, guys.
Ollie,
Thanks, everyone.
coming back on there, thank you very much for your time as well, guys. So I'll wrap that up there. And thanks very much, everyone. And we'll see you again soon. Thank you very much.
Cheers.